No one knows why, but for the last 50 years, there has been a relationship between an oil price drop and severe stock market crashes about 10 years later. Last February, MarketWatch predicted the 2009 oil crash that happened under Barack Obama would cause a severe stock market crash this summer. And right now, we are watching this happen. The 2009 oil crash occurred because of oversupply. And now, a severe stock market crash is happening, 10 years later, like clockwork. This current market crash is as bad as Black Monday, October 19, 1987. Almost 10 years before this, the oil shock began in 1978 under Jimmy Carter. Why does an oil price drop crash the stock market 10 years later? We do not know, but things take time. Decisions made under one president can affect other administrations later. We do not know the effect the current stock market crash will have on the economy. And there is potentially another massive stock market crash on the horizon, thanks to one impulsive action. An even larger oil price drop happened in 2020. Why did this occur? In 2019, the COVID pandemic caused the oil supply to greatly increase. Because of this, Saudi Arabia and Russia met in December 2019 and agreed to meet again in March 2020 to finalize a proposed 2 million barrel a day oil cut. But a simple, impulsive mistake made this oil cut more severe. Because Russia's largest oil company, Rosneft, was trading with Venezuela, Donald Trump levied sanctions against this company in February 2020, only 15 days before the scheduled OPEC meeting in March. This was not a smart move. In fact, experts had been warning for 2 weeks that Trump's sanctions could destabilize the oil markets, but he did it anyway. He could have waited a few weeks until the OPEC meeting was over. The president of that company, Igor Sechin, is Putin's close friend and ally. According to this report from the Voice of America, Sechin convinced Putin to walk out of the OPEC meeting. This caused a price war and an even larger oil price drop than the one that occurred in 2009. 100 oil companies went out of business, the stock market crashed. This hurt Donald Trump's chances for re-election. So what did he do? He negotiated with Russia and Saudi Arabia, the largest oil cut in history, 10 million barrels a day. This caused gas prices to spike, transportation costs rose, and inflation has gone through the roof. This oil cut, negotiated by Donald Trump, is still in place, causing higher prices. But will the crash he caused in 2020 cause a stock market crash in 2030? We don't know, but we do know that the 10 million barrel a day oil cut negotiated by Donald Trump is still in place, having an effect years later.